Hi, it's Lee, and welcome to the Test Economist. Yes, the stock price is down a lot, and people seem very concerned. We're in a recession, though, and this is what happens. It feels like the global financial system is going to collapse, and it's the end of capitalism, and the empire will fall, like when the Roman Empire fell. In the global financial crisis, people were a lot more worried than this. The banks were going to collapse, and liquidity would dry up, and the economy would be like an engine without oil. But we got through it. It was a long recovery, and at the end of it, surprise, surprise, another boom. Just like how history continues to repeat. One way or another, there was too much money in the global economy. In the global financial crisis, it was artificially created through leveraged forms of equities like CDOs, or even derivatives like synthetic CDOs. There was too much money in the economy, and eventually it leveraged too far, and the music stopped and came crashing back down. And as everyone was over-leveraged, the economy needed to be propped up by massive bailouts for the banks, or everyone else loses their money. In this boom, the bailouts, or COVID funds, is what injected too much actual money in the economy, creating the same scenario. Except this wasn't leveraged, so it wasn't going to crash. It was going to spiral into hyperinflation, so needed to be slowed down. There's always something that happens. And there was inevitably always going to be a crash. It could have occurred from all sorts of areas. For a start, there were already two noticeable bubbles, crypto and EVs. These could have continued to expand further and further until they popped, and they may have gotten so big by that stage, it could have created a crash too, especially if derivatives were involved. This is what happened with the dot-com bubble. But even the good companies got hit too. Companies? Maybe just one company, Amazon. Not much else made it through that crash. Google wasn't public at the time. In fact, their IPO was shortly after the crash and likely set them back a massive amount of capital. But the crash we're facing this time has been self-induced by the central banks, concerned about inflation running out of control, which would mean the central banks and government lose the value of their greatest tool, their license to print money, if the money ends up having very little value. So they harnessed the brakes on in the economy to do what they could to stop it. Crypto went down pretty fast. The EV bubble too. Rivian went from about $130 from its high down to $30, 23% of its high. Whereas Tesla is at 42% of its high still. It didn't crash as bad as it had a more solid base, like profits. Tesla is the Amazon of the dot-com bubble. It had to go down with the rest of the industry, but will end up being like Amazon is in the e-commerce industry today in the equivalent of electric cars, or cars in general. Of course, this is with the controversies with Tesla, or mainly the antics of the CEO, bringing it down this much further. A perfect storm, being hit from many angles right now. Then on top of that, as we know, Tesla is always fighting FUD and short sellers. The mood out there is negative, and everyone wants to look at things that match their mood. No one's interested in hearing hyperballs talking about Tesla hitting $1,000 next year. They want something believable enough to see them back in profit, even right now. Not just hope, but believable hope that is tangible to them. Despite what Elon says with the Cybertrucks will hit volume production next year, etc., it's not believable enough for many. And admittedly, Elon has a reputation of not delivering on time. Other people are making lowball estimates too, and deliveries for Q4 or total production for 2023. Estimating that production next year will be at a lower run rate than it hits this quarter. I'm not sure how they work that out, but it seems to be what people want to believe. They want to listen to the more bearish analysts right now. They want to hear the worst case scenario, as they think they're telling them the truth, as it fits the current fickle sentiment in the market. I mean, seriously, how crazy do you have to be to think a car company can grow at 50% in this economy, even if it is Tesla? But Tesla already has. Their end-of-year production is pretty much at a run rate 50% more than the total production for 2022. We'll be at a run rate of 2.1 million a year by the end of Q4, and will likely deliver around 1.4 million total for 2022. Well, 50% more of 1.4 million is 2.1 million. Yet analysts are saying under 2 million for the year. They have the same data we do. How are they deciding this? Perhaps they're using automotive stock analysts and grouping Tesla in with the rest of the automotive industry, which was even suffering prior to the recession. Tesla's two biggest assets have been working against Tesla's financials all of this year. They will do the opposite next year. On top of that, some bad quarters with lockdowns, line upgrades, lower margins, missed deliveries have skewed the numbers and locked in people's reality of Tesla's success. Stock prices are more about psychology. Finding good companies is about numbers. I analyse the company. I don't look at charts or tea leaves to predict the future success of Tesla's stock price. But that's the thing. This 50% growth is just production. Oh, and like I said, we've already hit that. If it goes as well as Elon thinks, we're probably closer to 80% growth next year. But I think 60 to 65% is highly likely. Then these new factories that have been weighing down the financials will start pulling their weight. Rather than reducing the average margins, they will increase them. People don't seem to understand what it means when Tesla increased their production further and the operating leverage it generates. Tesla's OPEX remains relatively low, consistently. Once they ramp up, it will still remain relatively low, yet Tesla's gross profits are increasing, meaning that operating profit will increase relatively higher. This actually means that Tesla could reduce their prices if they so chose, or needed to in order to meet demand if it was dropping, and due to the increased economies of scale they generate, it might mean that the operating margin stays the same. For example, Tesla are in reality around 20% operating margin with 30% gross margin. If they dropped to 25% gross margin and double the quantity of cars they sold, the operating margin may still be about 20%. Except of course their revenue would have increased a lot due to doubling the quantity of sales. The only question is, how are they going to double their sales? 4680 is the best answer. It always has been. I can't extend to you enough how much it means. Tesla's production is limited by sales. 4680s are the fastest cells that can be produced, thus making the most amount of batteries for cars. But they'll also be the lowest cost cell too. The battery is the largest cost of an electric vehicle, and Tesla think $70 a kilowatt hour will be the cost. Possibly a saving of around 30 to 50% compared to what they're paying now for batteries, and that saving is 100% profit. So, as low as the stock price is now, once these ramp up, the numbers are going to be hard to ignore. Numbers are what I study the most, and they tell me that once these new factories are hitting a reasonable margin, then profits will quickly double. We're basing the current Tesla valuation on a trailing 12-month value of $11 billion in earnings. Yet next year, $30 billion seems on the low side. That is a massive jump in profits, and I don't think many people are seeing this coming. I haven't heard people discuss it. Right now, everyone is too concerned with things like demand dropping in China. They're missing the bigger picture. China is not Tesla's biggest market, and they don't rely on it for their future growth, especially when Elon starts talking about 1,000 gigawatt hours a year just in the US. About 16 times more cells than they currently use in China, even after this latest ramp. I repeat, 16 times as many cells, and if they're 4680 cells going into vehicles, then each kilowatt hour is likely twice as much profit compared to China. Although if you included FSD, subsidies and tax credits, maybe as much as 3 times as much profit in a US 4680 Model Y compared to selling a standard range Shanghai Model Y. 3 times as much profit with 16 times as many cells is about 50 times more total profit. This is the big picture. These numbers get crazy. I know right now a lot of people think Tesla is a sinking ship and the captain bailed early to another sinking ship called Twitter and is neglecting Tesla as a result. I would say Elon is still concentrating on Tesla where necessary. It is his overall workload that's increased more than anything, from about 70 to 80 hours a week to now around 120. I work about 60 to 80 hours a week, but have never hit 100, not even at my peak. 120 is absolutely insane. This is one very hard-working CEO. He still cares about Tesla, not just as a company or his net worth, but as prolonging the future of humanity, perhaps viewed as the biggest goal possible, likely first principles thinking. Elon is incredibly smart. He knows what he's talking about. I study along to keep up with him as much as possible. Keeping up might be a stretch, but stay on similar lines and read and study similar books, like The Fall of Civilizations. I don't want to sound like a delusional fanboy. I realise it's not as easy out there as it once was. But Tesla is not a mature company yet. They're still in the growth stage. Just like after the dot-com crash, companies were cutting back on advertising, at least through the mainstream media, except Google's advertising income kept increasing because they had not yet matured. Tesla hasn't matured to reach their market share in the auto industry yet, as they can't make enough cars. Therefore, they can't lose what they don't already have. I like exploring the economic impact Tesla will have and how big it will be in the future, but I understand if right now you're more focused on just wanting to know if everything will be alright, and you'll eventually recover your losses in a believable way as possible. If that's what you want me to focus more on, then let me know. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.